Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, July 31st, with your grain market morning commentary. Currently, we have corn trading between 5 and 7 cents lower. Soybeans are trading 2 to 3 better, and the wheat is down 20 cents. In the outside markets, we have the energies down a little bit. Equities barely changed, slightly lower, maybe dollar down a little bit, treasuries up a little bit. Kind of a mixed bag in the outside markets. And we have a lot of reports, data to look at this week. So the outside markets are expected to be quiet. We have a 2-day FOMC meeting tomorrow, Wednesday. The Fed will make their announcement. On Thursday, we have the ECB making their announcement. Remember, they promised they'll do whatever it takes. So, you know, the markets are pricing in further stimulus right now. That's why we've seen some good rallies in the equities and in commodities in general. Friday, we have the all-important monthly unemployment report also. So, you know, the outside markets might be a little choppy. They might be very quiet. But the grain markets are trading on fundamentals right now. We have a tight supply. We have probably the most severe drought that we've seen, at least in the last 30 years or so. And yesterday, we had the weekly crop condition update. Corn and soybeans both came in within the expected range. Corn, 24% of the crop rated good to excellent. Soybeans, 29%. About a year ago, both of these were 60 to 62%. So you could see how badly damaged the condition of the crop is right now because of the hot and dry weather we had. In corn, we've seen a bit of demand destruction already. And I've mentioned to you, you know, above $8, it's hard for me to imagine that the price will continue to go higher without that demand. Soybeans, on the other hand, have had very strong demand, and prices, in my opinion, are likely to move higher there, especially with the possibility that over the next 2 to 3 weeks, a very critical time of development for the soybean crop, that if we remain in this weather pattern of hot and dry, we'll get more damage. Will reduce yields, and prices need to go higher to start to ration demand there too. I want to touch on wheat corn spread real quick because this is something, you know, that I mentioned to you off and on. The December contract traded below $1 today. We continue to see the difference in the price between corn and wheat narrow. It was $1.50 just a couple weeks ago. A day or two ago, it was $1.25. Today, it's trading less than $1. You can see why the price needs to come together. There's no reason for wheat at this time to be trading $1.50 more than corn. Corn has the tight supply. It has, well, you know, that ethanol thing. That's another story we're not going to have time for today, but I'd like to talk to you about that ethanol demand. 40% of the corn crop going to ethanol, and that's been, you know, a big stink recently between the meat producers, the EPA, and, you know, their reluctance to get rid of that mandate. But anyway, that is a big part of the demand for corn, obviously 40, and it could be as high as 50% depending on the size of the crop we get this year. So we see that wheat and corn spread coming together. We have plenty of wheat. That's not a problem. The prices come together. So that's something you need to keep an eye on too. It's a great opportunity there. I'd like the opportunity to talk to you about that trade. Please feel free, give me a call, 800-826-4124. And I'd also like the opportunity to talk to you about this ethanol blending, the EPA's mandate, that sort of stuff. There's a lot to talk about here. But as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.